this time of great fluctuation, investors are trying to understand Donald Trump and his way of thinking. Many are wondering if there's still room for growth or is another market correction on the way. We're joined now by Thomas Martin, Senior Portfolio Manager at GLOBALT Investments. Thomas, thanks for joining us today.
Great. Thanks for having me on the show.
So what have you been watching during this period of great change to try and steer investors?
Well, right now we're in the midst of earnings season, and so that's the thing that we're watching carefully and seeing what companies are saying as they report, how they are willing to guide, what the basis of that is. And of course, we're watching all the commentary from the administration and the negotiations. And thirdly, we're watching the 10-year yield.
So when you're watching some of these earnings begin to roll in, what's your take so far on what you're seeing?
Well, it's mixed. And of course, that's not really any help. But I think you saw on the consumer side that many of these companies that do source from overseas are scrambling to try and figure out what they're going to do. And on the positive side, what a lot of them are talking about is ways to mitigate the tariffs. So, an acceptance that they're going to have to change the way that they do business as much as they can. And as quickly as they can without incurring too many long-term expenses. And so there's been a lot of references to that, and I think that's very positive. A number of the companies have said, we're not going to change our long-term guidance yet because we don't know how things are going to fall out, or because we think that we can do some mitigation in here. But I think that there's still a lot of unknowns. Some of the other companies that have reported have come in and said that, the hard data is still good and their businesses are chugging along and they're maintaining their guidance.
Are you changing sort of your strategy as you go along? I'm just wondering for the last month since Liberation Day, if you've had to make some decisions about what you're going to sell, what you're going to keep, or are you sort of trying to ride this out?
Well, we're always making decisions about how things are changing. We were fortunate in that when we were coming into this, when the market was at highs, that we felt as though we could take some profits and trim and have a little bit of extra cash in our portfolio. So have some dry powder and take advantage of that. So when the downturn did come, we were positioned appropriately to at least outperform the benchmark, if not, protect absolute returns. So we have the luxury of having some dry powder and waiting. And now it's just a question of, where will things settle out? And we're kind of in the middle from, the top to where the bottom was, and this bounce back and sort of a retest, and then back in the middle here. So the rhetoric does seem to be moderating somewhat, but the numbers are still pretty high for as far as tariffs go, and the disruption can still be pretty high. So we're conservative, I guess you'd say.
Okay, let's talk about some of your picks today. The first one is Quant Services, and I noticed that they shot up quite a bit just in the month of April. So tell us a little bit about them and what's going on.
Sure. Well, Quant Services is a provider of electrical services and labor, first and foremost, and then also some electrical equipment. And they're very heavily tied to increases in power generation in, electric utilities, and of course in data centers. They've been very heavily tied to the data center trade. So when that was in full swing, and everybody thought it was going to go to the moon, they did very well. And when there were questions that maybe we weren't going to build them as fast as people were thinking, the stocks came off a good bit. So you went from a position where you really were, if you were going to buy them when they were high, they were overpriced. And now that they've corrected a bit, you still have a good long-term fundamental story underpinning the company.
Got it. Okay, your next pick is Costco. And I'm wondering if you're betting on Costco just because it's Costco and you think as a business it's going to continue on, or do you think they're going to get a bit of a benefit here from people watching their pennies a little bit more and wanting to choose to spend wiser in these times?
Well, it's all of the above, and frankly, they've always benefited from that. But they are in the consumer staples area, and that sector has gotten a lot of attention. But it's the retailers there, like Costco and Walmart, that are well positioned for this environment. Whereas some of the consumer product companies, as we've seen with the most recent earnings reports from Pepsi and Procter and Gamble, are really struggling. So these hypermarket companies that have really dialed into their consumer, and both of those companies have catered to both the higher end consumer and the lower end consumer. So they're well positioned. They give good value to their customers, and they have good product assortments and a lot of room for growth on different revenue metrics. So that's why we continue to be positive on Costco, and they're not tied to the AI trade.
Somebody that is tied to the AI trade, of course, is your third pick, Nvidia. Nvidia, like everyone else, has come down quite a bit. And as you mentioned, there's been questions about the build out of the data centers, how much that's going to carry on, at what pace it's going to carry on. Some are revising what their CapEx spends on AI. So I'm just wondering why Nvidia ends up as your third pick.
Well, I wanted to put that one in there, even though it is related to, certainly is the AI trade, but is related to quanta, but in a different way. I mean, these are the cutting edge semiconductors that are in these large language models that are really just at the beginning stages. And, when the stock was up at 140, the PE multiple was high, growth expectations were, more to perfection. And as it's come down closer to 100 and certainly less than 110, you're getting another chance to be able to buy the leader in this area that has a good, strong moat and a good, strong lead. And we believe that the runway for requiring this kind of computing power and frankly, future generations is still at the early stages. So it's a good time to buy this today as opposed to when it was higher again.
Got it. Thomas Martin, I have to leave it there. Thomas is a senior portfolio manager at GLOBALT Investments. Thanks for your time. Up next.